Ladies and gentlemen, good day and welcome to the JK Laxmi Cement Limited quarter and half year ended 30th September 2025 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital. Thank you, and over to you, sir.
Thank you, Darwin. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q2 and H1 FY26 call of JK Laxmi Cement Limited. On the call, we have with us Mr. Arun Kumar Shukla, President and Director, and Mr. Sudhir Bidkar, Executive Director, Corporate Affairs and CFO at JK Laxmi Cement. I would like to mention on behalf of JK Laxmi Cement Limited and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future business developments and statements which are based on current management expectations. These statements are subject to a number of risks, uncertainties, and other important factors which may cause actual developments and results to differ materially from the statements made. JK Laxmi Cement Limited and the management of the company assumes no obligation to publicly update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. Also, JK Laxmi Cement Limited has uploaded a copy of the Q2 FY26 results presentation on the company website, which participants can download. I will now hand over the floor to the management of JK Laxmi Cement for their opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, Arun, sir.
Thanks, Vaibhav, and good afternoon to all of you. Thanks for joining this call. We have already uploaded our result on the website, and all details are there with you. I think everything is there. I think we can take questions right away.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question comes from the line of Nigel Mascarenhas from Leo Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. I just had one question. Can you summarize the expansion timelines and capex plans to get to 30 million tons capacity for each of the projects over the next 5 years?
Right now, we are at 18 million with the commissioning of the Surat grinding unit, which we announced in the month of September. From here, our journey with the Durg brownfield expansion will take us to 22.6 by FY28. And from there, we have 3 greenfield plants, Nagaur, Kutch, and Assam. They will come in 29 and 30 of about 3 million each for Nagaur and Kutch, and maybe about 2 to 2.5. We have not yet found out on the size of the Assam, but in that region. So that is how we are going to reach 30 million by FY30.
Got it. And also the expected capital outlay for the projects?
Right now we are talking of, we have zeroed it only on the Durg brownfield expansion, which is costing us about 3,000 crores. We have not yet firmed up on the greenfield for Nagaur, Kutch, and Assam.
Understood, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Our next question comes from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi, thanks for the opportunity. So the first question is on the status of the Durg expansion. So just following up from the previous Q1 call, has the equipment order been placed now, or what is the status of that?
Yeah, you are right. You had asked this question earlier also, and we had confirmed that we will confirm to you in the next quarter. We are happy to inform that the orders for all the major long delivery items have since been placed.
Okay, so which will be your kiln and grinding units and everything?
Yeah.
Great. And the timeline now is March 27 for the kiln and I believe
The Durg grinding unit, yeah.
And I think one more grinding unit is targeted by March.
Yeah, we club and take one of the two, yeah. You're right.
Right. Thanks for confirming that. And also for the quarter, the revenue seems to be a bit high, and even there are some traded purchases in the P&L. So could you give a breakup of the cement, non-cement revenue in that context?
Non-cement revenue in this quarter was 153 crores.
Okay. And what was the EBITDA margin for this?
EBITDA margin there is only 4%.
4%.
Yeah.
So has the cement realization been higher QOQ for you then?
So I think what you are looking at is in blended. If you really break it up, contribution from our other businesses like SBS has gone up. It was 144 crores to 153 crores, so that is one thing. Second is we have improved our sales trades in North more than East. The proportion in case of North has gone to 69%, and North includes perhaps Gujarat also, right? So we divide that our geography into North and East. North include Gujarat. Our proportion has gone to 69% in these markets, and East has gone down a little bit. So that is second. Third reason is, premium proportion has gone up by 3%. If you look at, last quarter premium proportion, it was 23% of trade volume. In the current quarter or the just September quarter, it was at 26%. Right. So this is second. Third, of course, I think because of the commissioning of Surat grinding station, our volume has gone up in Gujarat, which is a better, realization market than others. These are the reasons.
Sure. And what is the capex guidance? I see in 1H it's only, I think a 250 crore kind of capex that I can see in the cash flow.
Yeah, we are talking of about 1,000 to 1,200 crores in the current year, full year. First 6 months there has not been much, you're right, in the cash flow. So that is what we are talking of, and maybe 13 to 15 crores over the next 2 years.
1,300 to 1,500 crores per annum, you mean, next 2 years?
Yeah.
Okay. And does this include anything for Northeast expansion, or this is only Durg expansion?
No, it does include marginal expenditure for that as well.
Right. Because 3,000 crore is Durg, right? I mean, so in that sense.
Yeah, as of now that is.
Sure. I'll come back in the queue. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Our next question comes from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi. Thank you. So just continuing this, so out of the total 3,000 crore Durg capex, how much we have already spent till September?
September, I don't think we have spent much. Barring about 50 odd crores we would have done. Most of that.
No, till now, out of 3,000 crore for Durg, how much till now we have spent?
Yeah, we are talking of that only. 50 odd crores only has been spent. Rest will come in the remaining part of the current year and next 2 years.
Okay. So total we are saying 1,500 crore, 1,000 to 1,200 crore for this year, and next year also 13 to 1,500 crore, and even for FY2028 also. So then we are not even factoring the capex for whether the Nagaur or Kutch or Assam.
Kutch we only pursuing with the land acquisition. The major expenditure will happen in the last 2 years, which is 28 and 29. So we will be focusing more on the Durg expansion brownfield up to 28. So if you see, we have talked of over the next 2 years, that is 3,000 crores, 1,000 to 1,200 in the current year, that is 4,200. Out of that, 3,000 goes for Durg. So remaining 1,200 is for maintenance capex and other small land acquisition, some ordering of equipment, even some land acquisition in Northeast and all that. But majority of that expenditure will flow in 29 and 30.
But sir, considering both these are Nagaur and Kutch are greenfield, so at least it should take 3 years in terms of the cash flow capex spending if we want to start by FY30.
Initial expenditure is primarily on the land acquisition and the land development. It kick-starts only when you start ordering the equipment and the equipment start arriving. So it will be more rear-ended rather than, and initially we only need to open LCs and all that. That is what we believe as it may undergo change for FY28, maybe later as we come closer to that time period.
Okay, got it. And sir, now coming to on the cost front, so this quarter, also if you can specify the Kcal cost, because the power and fuel cost seems to have gone up significantly. And even to some extent, the freight cost has also gone up. QOQ I'm talking about. So just wanted to understand how one can look at, because we were having 120 odd rupees cost saving over 12 to 18 months. So from here on, how much more savings one can look at?
Yes, I think we mentioned last time also, those levers are there. I just mentioned a couple of minutes back that we have improved our product. Yes, during July, September, our distribution cost has gone up. Of course, lower demand.
Sir, sorry to interrupt, but we seem to have lost a few words for you in between. May I request you to please repeat the last sentence, sir?
So, all those levers which are going to drive performance main aim which we discussed last time, which is about improving premium product, reducing distribution costs, working on efficiency in the plant level using technology, CSR, renewable power. I think those things remain. I think we are working on that, and we will continue to work on that. And whatever we have promised that, 18 to 24 months time, we are going to have at least, 120 rupees of savings. So that will definitely have. And we are on the track. And one of the things which I just mentioned was premium product has moved from 23 to 26%. We are going to take it further. A new brand which we had launched, which we call, Green Plus, that is doing very well. And that is also one of the reasons that we have been able to bridge our price, gap with the competitors quite a bit, right? So that is reflecting in our NOD also, right? So all those actions are ongoing, I think, and we keep on exploring new avenues. And one of the newer avenues, to my mind, is technology. How we can deploy effectively all those autonomous AI, digital algorithm in our Pyro process and grinding station. So that is the next phase of performance drivers for us going forward.
Shravan, sorry to interrupt you. Just to let you know, sir, that you have background sound on your line. May we request you to mute your line when the management is addressing your question, sir?
Sure.
Thank you, sir.
So, sir, just coming back to the in terms of the price and the cost and ultimately the profitability. So, how one can look at, in 1H, if we broadly look at around 700 odd rupees EBITDA per ton. So, going forward, two aspects. One, currently, what we understand is in October till now, the East prices have has declined. So, if you can confirm, and now third and fourth quarter, how one can look at in terms of both, because the price if it is lower and the further cost reduction, so how one can look at the profitability?
I think, Shravan, all those actions of improving performance is little mid to long term, right? So all those actions which I mentioned is not going to give, benefit right away tomorrow, right? What is important for us is to really all those ongoing levers which we are working on, which again I mentioned that improving our price positioning of Green Plus newly launched brand, which is doing quite well, improving our premium product, improving, supply chain efficiency. So these are the imminent things which we are working and will keep on working on that. So definitely this will give, some benefit in this 3 and 4 also, right? So this is one. And second, we have started deploying AI, ML and using technology in improving our performance. So that will give some benefit maybe going forward in the next 3 to 6 months. And all those external factors, we have to move along that only. You can't do much about that and we cannot worry about what is happening outside. And our focus has been inward and which will keep on doing.
True. So in terms of current, I got it, sir. I got it, sir. Just one thing to understand further. Currently, the prices in East, North, or wherever we are operating versus the Q2 average or maybe exit of September, how the prices are currently?
Yeah. So, trade prices are almost intact everywhere. Gujarat has gone down a little bit, but I think because of the demand, pressure maybe which happens during lean period. Non-trade prices dilution has happened in almost all markets. So you can take trade is almost intact, and non-trade prices have gone down even beyond 22nd September prices, right? So one was passing on benefit to our customers, which we have done, and even after that prices have gone down in case of non-trade segment everywhere. So perhaps once demand improves, then non-trade prices will inch up for sure. This is what I believe. And November onward, I think that the demand will look up and non-trade prices, which perhaps I think got eroded in the last maybe a month or so, will come back to the normal level. That is what my thought is.
Okay. Lastly, some data points, trade share, blending ratio, lead distance, Kcal cost, and green share for Q2.
Yes, so I think you have asked everything. So, our trade sale is at 53%, blended cement at 62%, premium 26%. Lead has gone down last quarter from 399 to 395 kilometers, and green power is at 46%.
And Kcal?
1.61.
1.61. Will it further inch up or will remain the same?
I think that depends. 1.5. Just hold on. September, yeah. This is 1.54, right?
Okay. Got it, sir. Thank you and all the best.
Yeah.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. Our next question comes from the line of Milind S. Raginwar from BOB Capital Markets Limited. Please go ahead.
Thank you, sir, for this opportunity. If we can focus on the line items, you mentioned 153 crores as the non-cement revenue. Can you please further give the breakup between RMC and the other components?
RMC is 72 crores, AC is 52, rest is the others.
And can you please have this number for the September 24 quarter also? That is the year-on-year quarter?
It was 120 crores total against 153, and RMC was 66 and AAC was 40.
Okay. Yeah. Sir, just in detail, this has been asked in the call previously. is about the bit of an, inch up, which is a bit sharp on the power and fuel cost on a Q-on-Q basis. Anything specific that you would like to, mention about it or call out on for that increase that we are seeing?
Yeah. So, one is, of course, I mentioned that my green power proportion in last quarter is only 46%, which has gone down. And that is primarily because of we take shutdown during this quarter two, right, of all kilns. So, WHRS production goes down. So, this is one of the major reasons. Second, you also have less solar power generation because of the weather. So, this is second one. And third, I think we have seen that petcoke prices also have gone up little bit. So that has impacted our power and fuel cost.
Okay. So any possibility of this normalizing in the subsequent quarter, or this is going to be a run rate kind of as for us going forward? I'm talking about the per ton base.
So at least on two counts like this, green power, definitely it will improve this quarter because of more WHRS generation and more of solar availability. On fuel part, and in our case, because we import, petcoke from outside, that is dependent on a lot of, other things, geopolitics, which is existing, and supply chain, issues which is there, right? So though I think petcoke prices are around, $116 to $120 per ton now. Okay, but I think if that goes up, then maybe I think we'll have some, impact on that. Otherwise, I think we see reasonably within control in the next, 2 quarters as far as WHRS, green power, and other cost elements goes.
Okay. And on the freight side, sir, again, on the per ton basis, both year-on-year and Q-on-Q, year-on-year is something which I want to understand more is there something that we try to reach out to newer geographies? Can you just, because there is an about 8.5% of jump in the freight cost on a per ton basis.
Yeah, so during this lean quarter, we definitely try to go to some of our non-core market, which is one of things, right? Okay, and that has happened in case of quarter two, because we sold some quantity in areas where normally we don't go, and even going forward also we don't go. So this is one. Second, some of the market we are seeding for future, which will keep continuing even coming quarters as well. Like as Mr. Bidkar mentioned that we are going to have grinding station in Bihar and then the Prayagraj and somewhere in Jharkhand. So those markets we are just have started seeding, so that will keep kind of continuing going forward also. But some of the markets are occasional markets where we have gone in the last quarter will not go when things are going to come back to the normalcy.
Okay. So now on the balance sheet, we see the receivables nearly doubling from March to now. So anything specific that you want to call out on?
Nothing specific. Generally, March we make extra effort to ensure that it is at the lowest, but it is normal. Nothing much to highlight on that.
Okay, nothing specific that you are mentioning on this. Right. And sir, just finally on the conveyor belt, are we in the east? Is there anything that new development that you like to call out on?
So I think from the last quarter when we discussed on this topic, I had mentioned that SAIL board has approved this leasing out of the land and the right of way for that overhead conveyor belt. That is now pending with the Ministry of Steel for the final approval. And that we are pursuing to get this as fast as possible. So this is what the update is.
So can I just ask one strategic question? This is being long pending. So are we giving some timeline to this that at how much is this going to be prolonged, or we will take something else as an alternative for this? Because this is being, a bit beyond, stretched beyond too much on a time timeline perspective. So anything that we are internally thinking on this?
I agree with you. I think it's taking a little longer time than what we expected, but we can't help something which you cannot really control. I think you can just put the effort in the right direction, which we are doing. Second, I think we keep on exploring alternatives also, right? So plan A, plan B, plan C kind of thing. So that is anyway I think is there, which I think is not firm up, but yes, we do keep working on plan B and plan C as well.
Right. I do know that, we will refrain from giving any volume guidance, but now that we have done 6.2 odd in the first half, anything we have in sight for the full year for 26?
So, what I said last time, I think our growth is going to be little higher than the industry, so that I still maintain. In the first 2 quarters, I think we have seen that, we have done better than industry in terms of volume growth. And that is what I believe that, in remaining quarter, 2 quarters also, we'll keep that, kind of momentum. But giving that, definitive kind of, volume, perhaps, too premature now because, things keep on happening. Like, quarter 1, you have seen a very muted growth, right? Quarter 2 was a little better for the entire industry, about, 6 to 7% of volume growth. So I believe that, quarter 3, quarter 4 is generally good. But this time, I think the, little, I would say, non-conventional trend was that October was not that great because of course, Diwali, and second, I think, unseasonal rain, I would say, which prolonged to for quite some time in case of our geography in the, North India, East India, and part of West India, right? So, with a reasonable kind of, assumptions, I do believe that we'll do better than industry in the coming 2 quarters.
Okay, sir. Thank you. Thank you for the opportunity. Once again.
Thank you. Participants, you may press star and 1 to ask a question. Our next question comes from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity again. So just clarifying a couple of things. So you mentioned that in Q2, the geographical mix changed a bit, which led to better blended realization. So now as we kind of get out of monsoon, so will that mix go back to the older levels, which means that at least on a realization basis, that could go back to similar trends as what we saw in Q1 on a mix perspective?
Amit, you are absolutely right. And as I mentioned, that is occasional move which we take just to improve little bit of our utilization.
Got it. Got it.
Right. Yeah.
Yeah, and that's what also kind of maybe changed all those a bit of freight costs and all also.
Yeah, definitely. Yeah. Very much.
Sure. And just I wanted an operational update on the OLVC. Where are we right now, and what is the visibility of the completion of the same?
So this overline conveyor belt I mentioned just a couple of minutes back.
Oh, sorry, I missed it. Yeah.
Right of way approval is now pending with Ministry of Steel. Board of Steel Authority of India has already approved. We are now trying to get approval from Ministry of Steel, which may happen, in coming days and months. It's very difficult to give timeline because, this is something which we cannot really control. But since, board has approved, civil board, I do believe that, things should come to in place in coming months. But very difficult, Amit, to give a timeline because how things work.
No, right, absolutely. And as far as that, also that Agrani, that 125 crore payment that we have made to them, so I think that's also recovery process right now after that lease issue that happened. So what is again the expectations of how that will play out?
Right now the matter is sub judice, so we'll wait for the court verdict before we take a call or talk much on that.
Got it. Lastly, I just also wanted to get the gross debt and net debt right. I have a number with me, but just if you can spell it out.
Yeah, put it on our website in the presentation, please.
Okay, I'll take it from there. That's all. Thank you.
Thank you.
Thanks, Amit.
Thank you. To ask a question, you may press star and one. Our next question comes from the line of Dharmesh Shah from JM Financial. Please go ahead.
Thanks for the opportunity and congratulations on good set of realization. It's possible to provide the geographical breakup for the regional mix for the first quarter and second quarter?
So Dharmesh, right now I am not handy with those information. I'll give you separately.
Thank you. Secondly, sir, we were earlier mentioning about the guidance of around 1,000 rupees EBITDA per ton for the FY2026. So the asking run rate looks very high for the second half. Are we on track for the guidance or how should we look at for the second half, or there will be any revision in the guidance?
So Dharmesh, I think we forecast things with a reasonable assumption. You know that now entire industry is less than 1,000 rupees. You know that. Okay? Because of whatever, competitive landscape we are in. Our effort has always been to kind of be closer to our, peer group in our related market. And if you look at the peer group and the market where we operate, I think we are very close to them. The gap has gone down and that gap will keep, going down even going forward, right? So that is what our effort is. If entire industry is not doing so well on EBITDA, I think it's very difficult because internal efficiencies you can drive to an extent, right? But overall market has to really support conducively to go to that level. But yes, what I said, I still believe that, our effort is to reach to that, first milestone of 1,000 rupees and being amongst, top companies in terms of EBITDA per ton. That we kind of, keep that our ambition intact even now.
And so going back to the mix perspective, because when I look at the overall our trade share perspective, it has declined on a sequential basis. So I'm just still trying to understand from a realization perspective, is there will be a significant shift in the geographical mix this time?
So, as I said in my previous calls also, now if my non-trade improves in Gujarat, maybe you'll see
Sorry to interrupt, sir, but your line seems to be crackling in between. May I request you to please repeat that last sentence?
Little clearer than before?
Yes, this is clearer, sir.
Yeah, sorry for the inconvenience. So, as I said, non-trade, if I sell non-trade in Gujarat, which is better in terms of, net price in case of, north and east. So whenever our mix changes, even if, trade non-trade goes other way, you'll find that, realization. And I said during my opening, question also, that because of, Surat commissioning, right, and improved, volume in Gujarat, you would see that, our realization or the net prices have gone up, right? Though you may see or you are seeing that, overall non-trade has gone up and trade has gone down. So I think we need to look at, these things along with the, I would say, landscape of pricing in different markets where we operate.
Got it, sir. And sir, just last question, are we eligible for any incentive in the UCWL plant?
Yes, we are eligible for a capital incentive, right? We have already applied for that and we are working towards, realizing that incentive in coming months.
Sure. Thank you. Thanks for the opportunity.
And in fact, we have not taken in our P&L.
Thank you.
Yeah, thanks, sir.
Thank you. To ask a question, you may press star and one. Our next question is from the line of Ritesh Dhoot, an individual investor. Please go ahead.
Hello, sir. In the Q1 Concall, you discussed about exploring inorganic expansion. So is there any update on that now?
Yeah, we keep exploring that. So that is a continuous exercise, provided that comes at the right valuation and right location and makes strategic sense for us. So no update further on that other than what we have been routinely doing quarter after quarter.
Okay, thank you.
Thank you. Ladies and gentlemen, this will be a final reminder to ask questions. You may press star and one. Our next question comes from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. Sir, just to check, Durg 1.2 million ton and Madhubani 1.2 million will come in March 27, and 1.2 million ton Prayagraj will come in September, October 27, and Patraru will come by March 28.
Yeah, broadly we are talking of 2.2 by March 27 and balance by March 28.
Okay, and not because Prayagraj will not be commissioning maybe 4-5 months earlier than the March 28.
We are trying, but difficult to say. We are trying.
Okay, got it. And sir, broadly, if I have to look at this 3 million ton greenfield Nagaur and Kutch, and also if you can specify how much clinker there also we are looking at, and maybe Assam also 2.5 million ton. Roughly ballpark in terms of the capex size would be how much one can look at?
As I mentioned, we have not formed it up about the project cost. It will be in the range of what otherwise a greenfield cement cost, 3 million. So clinker would be about, and 3 will be the cement. We have not yet formed up. We have in the range of anywhere between 2 to 2.5 cement.
Sorry, sir. Are you saying a clinker will be a 2 million ton?
Yeah, for the Nagaur and Kutch, 2 million clinker and 3 million cement.
Okay, but in terms of if you look at the other companies, so around $80-90 plus kind of would be there for greenfield per million per ton basis. If one has to look at, because being a greenfield, or it would be closer to $100 per ton.
Since it is going to come by 2030, so it will be closer to 100 only. I'm not commenting on the capital cost of the other company. But that taking into account the inflation for next 4-5 years, at least $100 would be there.
Yeah, because even if we, let's say, take that number also, so around 2,700 crore, then 2,700, 5,400, and then maybe 2,000, so 6,400 odd crore. So that the entire, as you said, mostly the entire capex would be in FY29 and 30 if we want to achieve a 30 million ton.
Yeah, we will be more clearer closer to, or maybe in 6 months or years time from now. We can give definite number of capex for those years as well. Since the project cost is not yet formed up and we are busy in acquiring land and taking other external clearances, difficult to put a number of capex for years. Maybe 6 months to a year's time will be definitely be able to share with you upper and guidance.
Yeah. Right. Yeah, but broadly will not be crossing 3 times net debt to EBITDA, even whatever there is a possibility if that is likely to happen, maybe FY30 could be FY31 also possible.
We would much rather like cross that 3 to 3.5 net debt to EBITDA line.
Okay. Thank you and all the best, sir.
Thank you, Shravan. Thank you.
Thank you. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to Mr. Vaibhav Agarwal for closing comments. Over to you, sir.
Yeah, thank you, Robin. Before we end, I had one question for Arun, sir. So, sir, we have a feedback from our distributors and our channel partners. So, except for the geographical mix, etc., what we have changed, we also have a feedback that you are working hard towards identifying leakages at the ground level, and that has also helped up. Basically, you are identifying a lot of conflict of interest between your ground partners or CNF agent, sales promoters, etc. So that effort has also helped in the realization. Is that feedback correct, sir, as per you? And is it a sustainable number, or is it a number which can roll back in quarters to come? So how much of it is sustainable, and what do you say about this feedback, sir? That's my question.
So absolutely, I think you are right, Vaibhav. I think this ground level discipline, having less conflict between channels like multi-role channel partners, that we have already started working on. I would not say those things have completed or accomplished. We have started working on that, and that is also benefiting us in many ways. One, of course, I think improving our price positioning and the price perception in the market, one. And second, also further improving our efficiency of supply chain. So I think you are right. There is a lot of things to be done in this area, but good thing is we have started that, and the initial, I would say the impact of all these actions is very positive, and that is helping us in many ways.
So, sir, I know it's difficult to identify a number or put a number to this perspective, but I want to say a number in Q2 versus Q1, or maybe H1 versus last year. How much of gains in relation to your guess you can put to this particular area, and how much is through market? If you can put a number, just for the sake of it.
Very difficult, Vaibhav. Maybe I think I'll have a very kind of scratchy calculation. I'll give you a little later, but right now very difficult to really quantify.
No problem, sir. Thank you very much. On behalf of Phillip Capital India Private Limited, we would like to thank the manager J.K. Laxmi for the call, and many thanks to the party for joining the call. Thank you very much, sir. We don't have any further questions. Thank you. Darwin, you can now conclude the call. Thank you.
Thank you, everyone. Thank you. Bye.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.